Okay, so welcome everybody to today's presentation. Just a couple of housekeeping items as we get started. If you just wanted to put yourselves on mute as the presentation's going on, and then feel free to unmute yourself and you could ask any questions to Sara that you have, or if you feel more comfortable and want to use the text chat, you can do that and I'll watch that and let her know the questions that are there. So I just wanted to I'll do an introduction. Bear with me for a second, sorry. So Sara has over 14 years of banking and client service experience. She began her career at HSBC and joined BDC in August of 2018 as a client relationship officer in Ottawa. She has been an account manager since July 2021. She is currently covering Belleville and Prince Edward County. She has built her career on a disciplined work ethic and goal-oriented mindset, with delivering excellence in client experience being at the forefront of her brand. So I wanted to welcome Sara Bakhshi from BDC.
You got that right. Well, hello and welcome. Thank you, Lori, for the introduction. Again, my name is Sara Bakhshi and I'm an account manager at BDC. And like Lori said, I've been I've been in banking industry for 14 years now. So it's been a long time. And I started as in a personal banking actually, and I moved my way up to commercial, and I absolutely love it. So I'm incredibly excited to be here with each of you and honored to be talking about one of my favorite subjects, leveraging cash. Over the past year, we have been collectively experiencing an unparalleled situation. And the business owners I speak to are actually started and also preparing for a new reality and new challenges. That's why I'm delighted to be able to talk to you about concrete approaches for managing your finances. So at BDC, we know that poor financial management is one of the leading causes of business failures. That's never been truer than it is these difficult times. A survey of Canadian small business owners show that almost all of them believe they possess an average or an advanced understanding of financial management in principle. Yet, only 7% were able to correctly answer most of the financial questions in an accompanying study. What that says to me is that understanding the concept is much easier than putting it into practice. You'll hear me talk about working capital, cash flow, and I'm happy to explain those terms, what they look like are. My business is doing well, but there is never enough cash, or my sales are up, but my profits are decreasing, and I don't know why. I don't understand what my accountant is talking about. I hear that a lot. And then the one that breaks my heart is when business owners tell me, I just filed my annual reports. I trust that my accountant will tell me if something is wrong. Doesn't work that way. You need to know what's going on with your business. So I want to start by taking a quick look at financial statements. They're typically prepared by your accountant. Financial statement allows you to look back at how you've been done in previous periods and track your results over time. They are more formal, and that makes them a good tool for not only internal use, but also in conversations with external partners such as bankers like myself and your investors. Let's look at the three main financial statements: the income statement, balance sheet, and a statement of cash flow. Lori, let me know if I'm going too fast, okay? Just
for sure, yeah, no problem.
Or something, just let me know. Because when I get excited, I just go through quickly. So let me know.
No problem, for sure. Actually, Sara, I'll just ask you a quick question. Do you want questions in between, or do you want to wait till the end?
You know what, when we talk about this next 3 slides, I don't mind taking the questions because it's really focused on financial statements.
Okay.
And if there is any question or explanation, I'll be happy to take them right away. But the rest of them, we can wait until the end.
Sounds good.
Sounds good? All right. All right. So I come from a personal banking and operation backgrounds and found the terms a bit overwhelming when I first started as a development banker. But with over 300 terms, our dictionary is designed to help you better understand the terms that you will come across daily while running your business or dealing with your accountant or your bank. So at BDC, we do have a website that explains every terms. And to be honest, I still use it, even though I've been in banking for such a long time, because sometimes the terms changes. Now, let's start with income statement. So the income statement are known as a profit and loss statement. Is an essential tool to track your company's performance. This one is for a so the one I'm showing is a manufacturing company that's making lamps and fixture. So it shows 3 main types of information about the company. 1, revenue that is recognized when you sell a product or provide a service. 2, expenses incurred to generate the revenue that has been recognized. 3, net income, or the profit that remains after you deduct your expenses. A regular updated income statement will allow you to track and analyze the performance of your business over time. With some good accounting software, it could be a QuickBook, something very simple. You can easily produce monthly income statements. These monthly statements can be compared to your budget and reflect on the reasons of the variance and compare them to the same time from the previous year. Now, you can see there is EBITDA in there. So just a little explanation. It means earning before interest, taxes, depreciation, and amortization is the primary calculation we use to determine how much of a company's cash flow comes from ongoing operations. It is a very important indicator for a banker to show if your business is healthy or not. Now, any question on this? No? All right. Let's go to the next one. If the question comes, we can always take care of it at the end of the presentation too. All right, so the next page is your balance sheet. So the balance sheet gives you a summary of your company's financial positions at a point in time. It provides you with a clear picture of what you own and what you owe. You can also use it to track your company's progress over time. Banks and investors will look at it to understand your company's financial health before investing or lending you money. If you apply for a loan and your business is already existing, I will be asking for this right away before even sending your application to complete. So it is very important to have. So assets must equal liabilities plus shareholders' equity. So a little explanation, assets represent the valuable resources controlled by the company. The liabilities represent their obligations. Liabilities and shareholders' equity represent how the assets of a company are financed. I'm not going too fast, right? We are good? Perfect. Do you have any questions on this? I will be giving you an example of how to complete a form about all of this. So that might answer questions if you have. Now, let's go to statement of cash flow. So the cash flow statement provides a high-level view of how cash has moved through your business during a period. It breaks down the cash that you generate or use into 3 types of activities: operating activities, financing activities, and investing activities. It also shows how your cash position has either increased or decreased during the period. This statement of cash flow is historic look at the opening and closing position of your cash. It looks back to how cash moved through your company over a given period. Your cash flow planner looks ahead. It's a tool that forecasts your cash flow in the coming weeks or months. And when you also track actuals, you can see. It's a critical tool for successful businesses, and one I'll get into in more detail. I will show an example of this and we will fill it up together. Do you guys have any questions on this one for the cash flow? No? All right, let's move ahead. Now, so what I want for you is to have more of that shareholder equity. That's a retained earning. If you're like many other entrepreneurs, you may have only a vague idea of what's happening in your company's finances and be relying on guesstimation. That happens a lot. I see them almost on a daily basis. So I'm going to be blunt and tell you that it's not good enough during the troubling times like we are in right now. You need to have a good vision of what's going on in your company's finances. Then you can act on that information to make improvements and pivot with more confidence. As you go through that process, you may find you need financing to enable your growth. I'm going to explore each of these steps in more detail. So first, monitor your performance. So that's where I would like to start by getting a clear understanding of where you are financially and where you want to go. The first step to improve your financial management is to plan for the upcoming months. You do this by making financial projections, your best estimate of how money is going to flow in and out of your business. Your financial projection helps you anticipate peaks and valleys in your cash flow. That allows you to plan for times when cash will be tight or when you want to take on a new project, like buying a piece of equipment or refreshing your website, for example. Once you made your provisions, you can track your progress against them. And as the week unfolds and adjust as you go. So that should be a document that you're constantly on it and you're changing things and you're updating it. Planning gives you more control, and that's good for your business and your peace of mind. Now, managing your cash is one of the most important jobs as an entrepreneur. Indeed, your company's survival may depend on it. Even profitable, fast-growing companies can go out of business because they run into serious cash crunches. That's why we recommend you create a cash flow planner. To do so, you can use a software tool, like a QuickBook, or a spreadsheet like Excel to record your anticipated cash inflows and outflows for the upcoming weeks. Once you create your projection, track your cash as it actually comes in and go out. This kind of planner allows you to anticipate the payment for customers are expected versus when payments of suppliers must be made. Now you're in position to forecast times of tight cash flow or plan for projects and financing needs. Your planner will help you stay on top of a problem and make adjustments, such as holding a sale or delaying discretionary payment. Our clients tell us that this significantly reduces their stress because they have a much better handle on what's happening in their business. And it really does. It makes a huge difference. Now, cash flow is often referred to as the lifeblood of your business. It's money that flows into and out of your business over a specific period. It's the money you collect from your customers on one hand, and the money you pay out to your suppliers or to purchase inventory on the others. It's more than just a budget, which often takes the revenue and expenses divided equally over 12 months. Seasonality is a serious consideration that is captured in a cash flow planner. Working capital is the money you need to support the extra expenses of a growing business. I mentioned before that even a fast-growing and profitable companies can face a serious cash flow crunch. I will have an example at the end of my presentation about a client that went through this. This happens when money is going out faster than it comes in from a customer. It looks like a tool you can use to avoid that is your business. All right, now, this is an example of a cash flow planner. I like it a lot. It's very simple, but we will go through it together. So this is a spreadsheet that optimizes projection cash flow items from week to week. Okay, this is a rolling cash flow forecast. It needs to update at the beginning and end of each week. It is time consuming, but that's what being a business owner is. You have to put time for this stuff. For small businesses, we recommend you make projection for a rolling of 13 weeks period. Larger companies with a stable cash flow can do this monthly. Now, let's complete the table. First, you list expected cash inflows, receivable and cash sales, as well as loans, subsidies, and any other source of cash that will come in. Next, you list the cash outflows, payables, recruiting, monthly payments, and so on, like rent or hydro and things like that. In this case, the entrepreneur at the beginning of the week one has a starting cash balance of $10,000. She expects to have a net outlay of $1,000 and will then have a lower cash balance at the end of month of $9,000. In week two, the entrepreneurs expect to receive a $10,000 loan to buy a useful forklift. So her cash balance at the end of month will quite high at $18,800. The next week, she will buy the forklift, and that adds to her account payables, which total $11,700. She will also be paying more principal and interest because she takes that new loan. She ends the period with a cash balance of $6,950. Follow up, and so the second point will be follow up and compare and analysis. The next step in this is to track your actual result and compare them to your projection. Starting with projections for the most recent period, you simply fill in your actual results and for that week or for the month, depending how big your business is. In this way, you update your planner on a rolling basis. Now, you can see how you're doing and quickly discover variation from projections that might require corrective action. A little later, I will present some of the tips on how your company can improve its cash flow. I know there was lots of information in here, but is there anything you need clarification on, or do you have any questions? No? Perfect. Let's go to the next page. All right. Now, ratios are useful for analyzing the financial health of your company and comparing your performance to other businesses in your industry. Ratios are also used by bankers, like myself, and investors when making lending or investment decisions about your business. They are also used by business owners to assess if they accumulate too much debt, stocks build too, and or like they buy lots of inventory and they don't necessarily need it at the time, and they're not collecting receivable fast enough, so they're spending more than they're getting money in. In other words, they help you to make a smart decision about money, which is why they are often included in financial dashboards and management reports. They fall into 4 basic categories: profitability ratio, liquidity ratio, leverage ratio, and efficiency ratio. I recommend talking to your accountant to choose 3 that make the most sense for your business and then track them every week. Now, a little side note, I deal with lots of accountants and lots of business owners, and you do pay your accountants and they actually have to answer your questions. No question is wrong. If you want to understand it, you can just sit down with them and ask them the questions that you have. They need to answer you. They have to answer you because you're paying for their services. So just have that in mind when you go see your accountant. Ask whatever question you have and they will be able to answer you and help you make some decisions. Now, let's go to the next slide. So now that we have some tools and monitor your company's financial performance, you can use them to make your company stronger. As I mentioned earlier, I'd like to offer you some tips on how to improve your cash flow management. Let's look at those. Here it is. So the first one is to get paid faster. Everybody loves money, cash is king. So try to get that money faster in. So for many women, payment is at the end of the appointment. But I know you're listening, I know you're a listener and planning their signature program rather than cashing on time clients. Number 2, get tough on deadbeats. So the clients who persistently fail to pay on time, it's important to aggressively follow up on late payments. One way to encourage your customers to pay on time is to charge late fee, and I highly recommend that. I know it's harder to do it on a smaller business, but if you establish this right at the beginning, they need to follow it. Late fees can be hard to implement, obviously, in practice, so consider asking for partial or full payment upfront and charge a premium price for any payment plans. As well, when customers who have been late paying on previous orders come back, you should ask for partial or full payment upfront or decline the opportunity. It is tough decisions, but it needs to be done for your business to survive. Number 3, it will be considering firing problem customers. Knowing your ideal customer is a critical part of your marketing plan. It's the people you want to sell to. It's not chronic late payers, those who complain excessively or return a lot of merchandise. They cost you money by draining the attention of you and your employees. So you need to make those tough decisions. And if you see that client's not beneficial to you, you need to let them go. Now, holding on to cash longer is just as important as getting paid faster. Both means more cash in your business. Focus on fixed costs, rent, utilities, insurance, subscriptions. Always be testing to make sure you're paying fair market value, or if you can get a better cost. They also may have payment plans with premium to explore what your options are if it's essential for your business. Give incentive to staff. You want them to feel accountable for costs in their area of responsibility. Consider appropriate reward for employees who find ways to reduce expenses. I also heard a great tip from Manjit Minhas. I don't know if you guys know her, but she's on Dragon's Den. It's part of her signature talk. She insists that negotiation skills are part of her team's professional development plans. All right, let's go to the next one. So holding too much inventory can take a bit out of your cash flow. However, you don't want to keep so little inventory that you run out of materials and can't deliver on time. Finding the right balance is called inventory optimization. I'm not going to get into the detail because it is a complex topic, but there are a few different levers you can optimize. So here's what you can do to achieve it. Plan your change in demand and volatility. If your company has seasonal highs and lows in demand, you should module inventory levels to meet your demand cycle. Optimize for different customers. So your customers may have different expectations in terms of service levels and lead times. Be upfront with customers about how you manage inventory and your lead time requirement to meet their orders. Work to build a strong supplier relationship. That is so important, especially after what we went through COVID. There is demand for supplies, and if you have a great relationship, obviously you will be ahead of someone that they didn't talk to for a few months. So the goal is to work with companies you can rely on to deliver on time and go the extra mile to meet a tight schedule. Consider technology. That's a big deal right now. Think about buying inventory management software, which has tools to help you forecast demand, compress your order to deliver cycle, and optimize buffer stock levels. And the last one, drop losing products. Speed up inventory turnover by analyzing each product line and dumping products that lose money. You have to remember that it costs money to pay. It costs money to pay for space to store and count stall inventory. It is not selling. There is cost to having it sit there. So get rid of it. Any questions? No. Okay. So now let's talk about leverage. That's my favorite part. Let's say you've got plans to expand your business. Perhaps you'd like to buy a new piece of equipment, build a prototype, or redesign your website. Many business owners make the mistake of buying for growth projects out of everyday cash instead of seeking a business plan. That happens quite often. The approach can put a lot of stress on your business cash flow. Often a better choice is to get a business loan. So BDC is a project-based lender. Here you can see an illustration of the hidden cost of purchasing a real estate. To give another example, I have met a few estheticians these past few weeks who want to start a medical beauty clinic. One in particular has a nursing background and wants to buy a laser for treatment, but she's debating between cost of lease or to actually purchase the machine. The question I asked were also about the other costs. Will there be to set up expenses such as electrical work to accommodate the equipment, the health and safety consideration, additional insurance, training maintenance, not to mention the hit of your cash flow while you are taking the time to bring the equipment into full service. Again, we know women entrepreneurs tend to be more conservative when borrowing. Our advice is to develop a cash flow forecast for each individual project, including an optimistic scenario, not just the pessimistic one. Then borrow enough money to ensure you can cover your project. Any contingencies that happens quite often, and specifically, especially the working capital required to bring your project to completion. So when I speak with women business owners, I think there are real misconceptions about the use of debt versus equity to finance their business. If it's okay with you, I just want to take a quick moment to explain the difference between them. Shouldn't take too long. We are most familiar with debt from a customer perspective, line of credit or overdraft at the bank, which is better for short-term purchases. Mortgage on property, which has consistent payment over a longer term. Financing through big box store or a department store credit card. You have access to this same type of debt as a business owner, plus a few more. A term loan works in like a It's like a mortgage, but it's typically for project or equipment. Trade credit from supplier allows you to delay payment for 30 to 60 days on goods. And I do have some clients that is actually 90 days. So that helps them a lot with their cash flow. And then there are a few other ones. Now let's look at debt versus equity. So family or friends may offer you money as a loan. To avoid misunderstanding, it is important to have a formal written agreement specifying the term of the loan, repayment requirement, and term of interest. That is so important to do because you don't want to ruin your relationship with your family members. So please make sure you have it written. It's business, right? So make sure it's legal and to protect yourself and your family member. Now, equity is an exchange of funds for shares in the company or as a partner. You will usually hear the term VC or angel investing. There is no repayment plan. Instead, they take a risk that the business is successful. Equity financing can also come from friends and family who want to be part of your business. Again, be sure you seek legal advice to draw up an agreement. Both debt and equity have advantage and disadvantage. One major benefit that is frequently overlooked is that business debt creates tax deduction. This may not have a big impact at the early stage, but can make a huge difference in net profit as you grow your revenue. The most significant disadvantage of using debt is that is required repayment, no matter how well you are doing or not. So you eventually have to pay it back. To avoid this, I have met many women who told me they cash in RRSPs or got a second mortgage. These are personal assets they are transferring to their business as equity. This is a scenario I want to talk about. In the case of debt, a lender wants to minimize the risk in the event you're unable to repay. So they will evaluate the assets you're willing to pledge as a collateral to secure a loan. This is where the concept of leveraging comes in. Those RRSPs or the home equity could have been used to borrow against. You get the cash you need and you get to keep your saving instead of just having the cash. From the lender's perspective, personal investments are sometimes not recorded as shareholder equity on the financial statement, so they are not taken into consideration. This is something to have in mind. Now, cashing in your personal saving could indicate a risk of poor financial management or insufficient cash flow. It can be a red flag for a banker. Once your cash is in your saving or equity is in your home, it can't be used as a collateral against the loan. So you may not be able to borrow the amount you need. Now, for BDC, when it comes to personal assets, we don't touch that. We will not go and put a lien on your house as a second mortgage. However, some of chartered banks, they will go ahead and do this and they will be able to help you start your business, but they will put a lien on your home. So there will be this, let's say, second mortgage on the house. So that's something to have in mind when you're thinking about cash, taking that financing from a bank. Now, our research indicates that women entrepreneurs are more reluctant than men to borrow money and more likely to try to finance their growth projects by saving for it from the cash flow. That's very common, and I'm the same thing. I like to have the saving, use my saving instead of going and borrowing or buying something on my credit card. So mistake number one is borrowing too late. So you may find yourself needing to borrow money quickly and doing it from a position of weakness. When there is a sense of urgency, it usually indicates to a banker that there was a poor planning. A better way to go is to visit your banker and discuss your plan and financing needs. In this way, you can line up the financing before you need it. bankers, myself, we would love to have a chat with you. We can go for half an hour coffee or have a quick team meeting so you can tell me what your plans are, what your projects are, and we could talk about it ahead of time. I know one of my colleagues started talking to a lady 2.5 years ago about a project, and she just started making that project reality only last month. But my colleague been involved in that whole planning, and she was part of it for the longest time. So it's okay, don't be shy, give us a call, book a quick meeting, and we will be happy to have that chatting. And if I can't help you, I can definitely connect you with someone who is able to do it. And I know Para has amazing resources in this regard. So don't wait last minute. Now, the second one, of course, you want to be careful about how much you're gonna borrow, but you want to make sure you can make your repayments. However, understanding how much a project will cost can leave your business facing a serious cash crunch when it comes to implementing. For mistake number 3 is paying your loan back too fast. That happens quite often too. Our research indicates that women are more likely to pay back their loans earlier in an effort to become debt-free. Again, it's important to reduce debt, but you also need to be careful not to hurt your company's growth prospects. Reducing debt too quickly could leave you short on cash. That's why we recommend that you compare your projected return on the investment of cash on how much interest you're saving by paying down your loan faster than required. If you expect to earn more investing the money in your business, consider slowing down your payment pace to free up some money and fund your growth. Now, so BDC, talk about BDC a little bit. Our mission is to help create and develop Canadian business by offering financing, capital, and advisor services, mainly to small and medium-sized enterprises. BDC provide business loan and advice to help thousands of entrepreneurs just like you manage their finances. If you think we can help you, don't hesitate to give us a call or visit us online. We are there to help you, and we only focus on your business. Now, we also support entrepreneurs in other indirect but powerful ways. So BDC has a series of ebook and courses that we have published, including a guide to prepare a winning loan request. They are available for download for free on our website. And search for so you just have to type in search for Entrepreneurs Toolkit, and you will have access to that information. There are tons of free tools in the website that you can benefit from. And this is it for me. Thank you so much for giving me the opportunity to present. But before I take questions, I just want to show an example. Oh, she went away. Anyway, I had her picture. So we had a client, her name was Colleen, and I don't know, maybe you have seen her in our commercials. Actually, she's one of the faces there. Now, she was Colleen Rody. So Colleen is the owner of Vision Tech System, a company in Mississauga, Ontario, that offers customers a wide range of security equipment and systems. A few years ago, the company was growing so fast that and it became a problem for Colleen. Vision Tech experienced frequent cash crunches, and Colleen was suffering through sleepless nights. And so cash flow tight because she was pouring all the company's money into hiring people and expanding the business. The problem were made worse by bidding too low to obtain contracts, and some large customers who were constantly paying late. So you see, there is lots of red flags in her business. So something had to change. What she did, and we all admire her for doing this. She actually reached out to BDC Financial Services, and we booked her advisory program. So she met with a coach, and they started training her. It is a commitment. She had to meet with the coach twice a week. So her coach helped her to better understand Vision Tech's finances and get the business cash flow under control. It was lots of work, but it was feasible. So the first thing she did was set up a cash flow planner to help anticipate times of tight cash flow and plan for projects and financing needs. The result has been more solid. She has a more solid company, better position for growth, and lots of less stress for her. It's just too bad I had her picture, but it didn't show. Now, I would like to answer your questions if you have any.
Yeah, if anybody has any questions, please feel free. You can take yourself off of mute and you can ask, or if you feel more comfortable and want to use a text chat, you can do that as well. And if not, then Sara, you had your information there. And if you wanted to, if you come up with some questions after, that's fine too. Just let us know. So,
Absolutely.
Oh, sorry, Barbara, I see your hand up.
Pardon me. Yes. So Farshid asked if we can have your contact info, and I'd like that as well. And I also wonder if we can get a copy of these slides. This is all new stuff for me, even though I've been in business for 20 years, but I'm a service business. So it's a little bit different than, having product inventory and things like that. But still, there's lots of really, really useful stuff here that I can use and that is super relevant. And then I also have a question, Sara, if it's okay. And I'm a service business, so I do writing and communications and strategies for mostly government, non-government organizations. At what point, and is there a number, and sorry if you said this, because I did get called out at one point, but is there a number, a dollar figure for where you should be involving like a bookkeeper? Because I do everything on my own, right? Like I do, except my taxes, I send that out to someone, but is there like an income number, like once you make over 100,000 or whatever it is, where you should be bringing in a bookkeeper? Do you have any advice on that?
To be honest, it really depends your business. If you have, let's say, enough time to manage it, then by all means, try to do it yourself. However, if, for example, I'm dealing with a client right now, she has a flower farm. So she wants to be on the field. She doesn't want to be in the office doing her numbers and all of that. And she had to hire a bookkeeper. She had to hire someone to help her so she can focus on the actual business, being on the field. So I can't give you a specific number, but let's say if your income, your revenue is, I don't know, like over 200,000, and you can actually afford having a bookkeeper, why not? This way you can maybe focus on the marketing part of your business, or going out and meeting with more clients and trying to book those new contracts. So what you can do, I actually spoke to an accountant a few days ago, and there is this very young lady who's a lawyer, and she created this beautiful business. She only hires ladies, and she started with 3 lawyers, and now there are 13 within a year. That's how fast she's growing. And she put this concept of 4 days a week work, and she's a mommy, and she hired a very good accountant, and the accountant was able to guide her and let her know what she needs to do. So using these resources that are available to you, have a chat with your accountant. They go through so many different clients that they will be able to let you know, oh, I know 2-3 people that are doing same business as you, and yeah, they have a bookkeeper or they have a lawyer taking care of this and that. So try to use the resources that are available to you. What I'm going to do, I will send this slide to Lori so she can share it with you, because I don't have access to your email addresses. But send me a quick email. I do have like a, it's called a startup resources, but you can actually have access to, let's say, a free lawyer for a half-an-hour consultation, and you can have a chat with them, and that will guide you. If no, I know Paro has amazing resources too. I work with Renee, I work with Shay, and they're just fantastic, and they can connect you with someone in that field, and you can get that information you need without paying too much for it. So I hope I answer your questions. It's just I can't give you a specific number.
You know what? It's great, Sarah, and it's a big thing. Like, we just did this biz camp with Paro, and part, like, it's sort of the vision is to grow your business. And my business is growing now, so I've got what I wish for, but it's one of those things, be careful what you wish for, because now, I mean, it's a great thing, but now it's like so many little things to think about that I don't even have time to do the work, right? And so it's, yeah, it's kind of, so you know what, I'll reach out to Lori about this, what Paro has, but, and I'll also reach out to you too, because yeah, just maybe take it to the next step. That would be great. This has been a bit of a confidence booster for me. So really appreciate your presentation. Thank you.
No problem. Yes, please reach out. And what we can do, maybe we can talk about advisory services. I know Paro has some very good ones that are fraction of what BDC charges. However, if there is a section that they don't cover, then we can definitely talk about it. Also, if your business make over $500,000 in sales, there is a CDAP program that was announced a few weeks ago. It's basically to it is advisory services, but is to add technology to your business. It is a grant and it's going very fast. So we can talk about this offline if it's okay. Send me an email and we will book an appointment. We can talk about it.
I would love that. Thank you so much.
No problem.
Does anybody else have any other questions? And if not, I put Sarah's email in the chat there. So maybe I just wanted to say thanks everybody for joining us today, and thank you, Sara, for providing us this information. You know, it was very a lot of information, right? And I think that sometimes, you know, it takes time to, you know, even think about it and process it with your business and stuff like that. So what you provided was really great, and we appreciate you coming today. If anybody would like a recording of today, because it could be helpful, you know, down the road or whatever, please let me know, and I could always send you the recording to it as well. So again, thank you everybody for joining us today, and thank you, Sara. Really appreciate you being here.
It was a pleasure. Thank you so much. Looking forward to hearing from you, ladies.
Sounds good. Have a great day, everybody.